electric vehicles for more than 2 years. I think we have researched way too much. And
this is the part that I like, is where you're the diehard Wall Street researcher, and then there's me, the investigator. And one of the critical things I think is required for short is crappy management.
Yeah, that is true.
And crappy management manifests itself in a number of different ways.
Let's start with Rivian. They're expecting sales and deliveries report today.
I like it. Holding above support of 32, though. Tesla's miss may be a factor. Stock seems dead, though. I'm not sure why. Need to get over 35 to get momentum going again. But I like it.
The stock is up pre-market. Duke Energy, virtual investor event.
I would leave it. Lost the 65 week last week in dramatic fashion. Broke good support at 96 and breadth turned lower.
Jeff, we discussed this last week, but are we in a secular bear market?
I think so. It's a tough one to swallow, right? Nobody wants to hear this. But the reality is, if we look back over the last 90 years, we've been in something of a super cycle. This is a parallel trend channel off the 1929 high and the 1932 low, connecting to the 2000 high, and now the 2022 high. And so that upper boundary has been challenged, and now we have to question whether or not we're going to retrench back into the lower boundary of this trend channel.
Typically, the market rallies in Q4 and through the following year. But do you see this year as breaking from history?
So we should always say that past performance is no guarantee. And I think that disclosure is particularly rings true in the current environment. In our view, part of what drives strong performance in past midterms is the fact that, at least going back to the 1920s, we've not had a recession start in the year following a midterm. So, we believe that there's a desire for more accommodative fiscal policy as well post midterms, because typically a president's party gets wiped out, or at least they lose seats in their first midterm election. So the president, kind of focusing on their own reelection, wants a more accommodative policy environment as well. 2023 could look really different. Strategas' odds of a recession are 50% for the year. And if inflation is sticky, it limits the ability for accommodative fiscal and monetary policy. And if that's the environment that we find ourselves in, there's certainly no guarantee for equities having that positive trend going forward.
If you're watching this, raise your hand if you've had positive equity or fixed income returns this year. Well, unless you were in oil like we were, or short the markets like we were, you probably are not having a great year. And if you're reading sell-side research, my question is, where was the flurry of sell recommendations in January, February, March, right? And if you haven't seen that, if you haven't seen hundreds and hundreds of sell recommendations, then that's telling you they're not trying to protect you, or they don't know what's going on.